The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everyone. Basil Chapman sitting in for Tommy O'Brien. This is the Friday, the 24th of October session. We've also got live trading, I believe, with the levy going on right now. So let's go straight to the market. So I guess CPI was a little bit more positive. Market spiked up very sharply. The futures up 211 at 47,131. We haven't quite made an all-time high yet, but it looks like we're going to, because if you look at the E-mini, here, this is the S&P E-mini. Look at this, the other futures, all-time high. So we made a peak G, and just to, it's Technical Friday, so in my show coming up after this is, of course, the morning market kickoff, but in the show that comes up after, which is the Tiger Technicians Hour, that's my show. I talk on a Friday, I usually go into greater detail in the Chapman methodology. It's almost like a little educational hour. In this case, the technicals, I have a very simple technique that takes you from the beginning of a move that starts with a buy signal that if it gets upgraded to a buy mode, should take you to 4 higher peaks. Each peak is alphabetized sequentially, uppercase on the way up, if you're notating, lowercase on the way down, and it goes peak A, 1 penny above A after you've made a peak, it starts leg B, 1 penny above B after that peak is formed, as long as it hasn't taken out the starting point that took you to A, means you've gone to a C, and it's just alphabetized. So you go A, B, C, D. When you get to D, other things can happen. In this case, because the 9 period was holding so well, this green line, let me get the pointer right there, the green line over the black line, the 9 period over the 14 period moving averages, it went to E, F, and then a G. There's never an H. So at G, if it went higher, you'd have to say, oh, is there a restart? Is there something happening? But G is usually where, if you have a pullback, it's usually a pretty sharp pullback. What happened in this case, it was that sudden move down. You remember that was that announcement during the day on Friday, and the market just plunged. And that was on the October the 10th, I think. Yep, October the 10th. And then what happened is there was this very big move to the upside, a counter-trend rally. And because you've now made a new high, that cannot be an H. So this has to be, and it's beautiful because what it tells you is that's an A, brand new A, that's a B, and we're in leg C. Therefore, you should go, because it's a buy mode, you should go to a D. So that means next week you see higher prices. Just to make it as simple as possible. There are a number of things that I could talk about. I had this in the S&P itself, but I'll do this in the futures. I usually put in a big rectangle, and I say, are we going to make a V-shaped pattern going lopsided, a cup formation that takes you to a B, A, B, C that goes to the previous high, or just under it, or just over it. In this case, we've popped over it, and it's only in leg C. Just make it as simple. So the E-mini says we're going high. This is based on the Chapman methodology. Monthly chart looks fantastic. It's just walking this green 9-period moving average. Let's go to the NQ. What happened there? Well, the NQ went to a peak F, pulled back, and this is now also peak A, peak B, peak C. So the NQ's there, and let's go to the QQQ, because that's the cash. Is that confirming? Yep, it's confirming. Peak A, peak B, at 612.80, just under the 613 all-time high, 613.18 high of the 10th of October. And today, so far, we've gone to 516.19. We're in leg C. And that we just saw in the NQ. There it is. So let me type that in, just to make sure that we're looking at apples to apples. A, B, and there's your leg C, and I'll put in an up arrow, meaning you're in a buy mode. Good. And you're in leg E, in the, I'll talk a little bit more about this in my show, leg E. Let's go to the IWM. The IWM is the Russell 2000. This has been lagging. It's acted pretty nicely lately, but it's actually lagging. But if you go to the RTY, this is the futures, you'll see that that's a nice move. Now, that is a leg, a peak F, based just on the notation with the 9-period moving average not having gone negative on that very sharp pullback. This is what I call a gray A. That's so far a B. But if we make a higher high, I'm going to go with this, that was a serious top with a down arrow. That's an up arrow. That was an A. This is a gray A. That's a B. And if it goes above this, we've confirmed that goes even higher next week in the RTY. Let's go to gold. Gold, I'll go to gold. Gold is down 23 at 41.22. I think that the top that was made at 43.98 on the 20th of October, that's going to stand for a little while. And we're going to watching it. Even if it rallies, I think it's going to be an H pattern. I've drawn this arch formation in. So far, it hasn't worked out. But you see it much better here if I go to the GDX. See the GDX? It went right to what they call the Chapman wave inside. This is the target support line, dashed pink on the way down, and it held it, and now it's trying to bounce. I'm going to be watching this closely. This one said by the end of October, there's a chance that we should test 67.26. We'll see if that's the case. I want to go to high-grade copper. High-grade copper had a nice rally yesterday, kind of following through today at 5.10, down just 0.01. And let's go to Bitcoin. Bitcoin's been struggling lately. It's up 1,045. Look at this. It went right down to the 200-period exponential moving average. Look how important this is. You didn't even have to care about the 200-period moving average since it broke out above it back in April. And then it kept coming down, and then it never went close, and it went to higher highs, high highs. Beautiful double top at 125,200 back on the 14th of August, makes another cup formation, goes to a slightly higher high of 127,240. That's like a triple top, and now it's back at the 200-period moving average, kind of struggling. So I think that Bitcoin, I should mention that we are still long Bitcoin. Bitcoin is still viable, but it's just having a tough time. Ethereum, people ask about that. I like to put them together. Ethereum did the same thing. It made this double top, 45.79 back in August, pulls back quite sharply to the 36-ish area, bounces to 45, can't make a higher high. Is trading down here, and I think Ethereum, Grayscale Ethereum, is also struggling a little bit. Let's look at the dollar, DXY. The dollar right now, trading at 9. Oh, I should have mentioned, daily chart, middle is the weekly chart, on the right is the monthly chart of whatever we're following, dollar index. Dollar index had a very nice rally from 96.22 on the 17th of September up to this little double top in the early part of October. It's just kind of struggling. It's really saying, you remember, the first administration, the Trump administration said, we would like a lower dollar because it helps exports, imports, etc. Well, we never got that. In fact, we went to a high back in September of 2022 of 114.78. And then we plummeted down to the 100 area, had a rally to 110, and now we're down in the 98 area. If they wanted... They're the boss. If they want a lower dollar, I think we stay with a lower dollar. I'll be back in a moment. Basil Chapman sitting in for Tommy O'Brien. We'll be back right in a moment.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the fund involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Kickoff show. I'm subbing for him today. I believe he had jury duty or something like that. So we've got Newmont Mining. Earnings come out. It had a spectacular move. Look at this, a straight line up. But most importantly, look, the moment the 9-period exponential moving average crossed positive on the week of the 7th of March, let's go to the high of that, not the 41.93, but the 45.04 level. Look what's happened. From 45, it's gone. 9-period moving average, 9-period moving average, 9-period moving average, still positive. And the turn down yesterday just nicked that green line for the first time since the 18th of July. That's 1, 2, 3, 4, 5, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, about 17 or 18 weeks. This is the first time it's touched the line. So, Newmont Mining, absolutely fantastic. If you look at the very long term, this is one of the highest highs it's been. And I can do this. I'll do it. Squeeze, 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 squeeze. No, it's never been this high. Back in 2011, it was at the 70. No, it hasn't been this high. So this is an all-time high. And earnings come out. Earnings were very good, I'm sure. I didn't hear it, but I'm pretty sure it was good. It shouldn't have been bad after all, right? And if you do a left side, right side price time match, look at this. I love this, a technique I developed a long time ago. Look at that high that was made back in 22 in monthly chart. If I go to this low right here, the actual low, on the at 29.42 February of 2024, and I developed this technique a long time ago. A price time, it's bar symmetry. The price time from the left side to the right side, look what happened. It's 1 month early, going to that high that was made at 86.37. It did hit, it hit it last month, so it's 2 months early. It hit 87.93. What a nice technique, huh? And not only that, look, if you do a Chapman wave inside wedge target resistance, dash green target resistance line, look what happened. This would have been the target right here. And once it broke above it, the same month that it broke above it, it went to the all-time high. Wow, that is nice. Not only that, it's in this beautiful shape that we love to look at, which is the cup formation. So it goes from there to there. Now, if I didn't do this, I did this on many other charts like AEM. Just before I go to AEM, let me show you. I would have taken it from this doji candle right here, and that would have taken you to the exact high right there. But technically, I love it when you can go to the low that turns out. Now, did you know it was the low? No, you didn't know it was the low. But it looked like once it was starting to rally, you could say, okay, I could do a measurement to this low and it would give you that price time match. When I do the very first one, I usually don't go to the low. I go to a doji candle. I would have gone to this candle or that candle, and I would have been able to change it after that. But it's a nice technique. Look at AEM. AEM is Agnico Eagle, AEM. That did that right there. Look, September of 2022, at 36.69 was the low from the 89.23 high of September of 2020. And it goes like this. If you sign up for my newsletter, the opening call, I have webinars where I discuss this very same technique. There's a technique where I do the upside action, and it did get there, and now it's blown through it. And Agnico Eagle. So this is trading, look, made a peak E. Chapman wave methodology. I usually look for round numbers at a high or a low to give clues. So we saw that April a year ago when all those semiconductors were doing that, and we had that really sharp sell-off. And other times we've seen it. So round number goes to 187.50 all-time high back on the 16th of October. Round numbers. No round numbers. So that just says to me that there's a chance that we're going to have another rally in the gold market, but not yet. This is in a digestive phase, down at $1.98, 162.69. This is American Agnico Eagle mines, mostly silver, I believe. Peak F in the weekly chart and a leg F in the monthly chart. I just think it's due for a rest. It's been spectacular. All right, now what I want you to do is this. Look at the currencies. So we got the dollar, DXY. You can see in the weekly chart, basically it's like a rectangle. Once you're stuck in a rectangle, wow, to break out of it, it takes a lot. So this is your rectangle right here. So, yeah, it's starting to move up a little bit. The 9-period moving average in the weekly chart is very close to turning positive. It'll turn positive if the dollar anytime in the next week or so goes to 99.75, test 100. That'll turn green, and that'll actually be a positive to say you can retest this high that was made at 100.26. And then the next level would be 101.65, the 200-period exponential moving average. That monthly chart looks just horrible. There's a pattern in my show. If I get a chance, I'll talk about this pattern. It's called the inverted Chapman wave falling axe formation, or a rising cone that also has the arch formation within it. I don't want to spend time on that now. Because of the USD JPY. This is USD JPY is the, here we go. This is the Japanese yen. Monthly chart still has a lot of work to do. It has a resistance line that goes like this right here. This is a Chapman wave inside wedge, inside track. repellent zone right there, has to break into the 154 area to get away from it. The weekly chart is improved a lot. It's in a rising trend. It's in a buy mode, actually, and the daily chart is in a buy mode, and it should go to a D, and the D will be, as your starting point, peak A, peak B, remember peak C. And if you've got a bicycle going to a buy mode, which this is in, it should go to a high above the high of the 10th of October of 153.27, and that'll start a leg D. I've already drawn in a bunch of things. That's the way it looks. It's still rising. Let's go to the Euro, EUR, USD. There we go. This is not very good. This is just stuck in a lower range. Look, it's troublesome. If you look at the weekly chart, it had left side, right side price time match. Look right there. And it didn't make it to the level that I was choosing, was that high of September of 2021 at 1.190. But it did get there, but a little late. So Euro is moving higher, but very reluctantly. So let me just do this as we're about to go to a break, and then the market will open. So let's go to the E-mini right now, trading very nicely high, up 46 in leg C in the daily chart. In a buy mode, should go to higher highs next week.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
This is the morning market kickoff show with Tommy O'Brien, except Tommy's not here. I'm subbing for him. Basil Chapman. I do the show that comes after the school, the Tiger Technicians Hour. Dow's up 225. CPI was pleasantly received and spiked much, much higher. The S&P's up 43. Here is the, let me just do this. This is live. So we're going to go to the INDU. INDU is spiked to a leg right here. This is at 218, 46,947. And what we're looking at is, okay, I need to get to that right there. So I have this technique called J-Wave Inside Track Repellent Zone. And look, every time that the Dow ran up to this particular little channel, it went above the pink line, but it couldn't break the green line. And even when it did, it came right back down. It kept trying. And even here, when it made that high, 47,125, just 4 sessions ago, it pulled back a little bit, but only a little bit. So I'm watching this very closely because the action that we're looking at right now is extremely positive. The 9-period moving average, this is the daily chart. The green line is over the black line. That's really positive. The MACD went back to positive after being quite negative. The relative strength, the little gray line, this is a daily chart. The gray line is okay. It's not great. The MACD is at 78%. I prefer 80%. And the blue line, this blue line right here, is the on-balance volume. It is not quite covering the high that was there. It's kind of flattening out. So when we pull back there, because it was against that inside track repellent zone, because we have so many long positions that have been working just beautifully, I needed some insurance, and I thought, okay, the Dow, even though it made an all-time high, there was 3 stocks that really powered the market high. You remember Coca-Cola, McDonald's, but I was a little nervous. So we went short yesterday as a trade, and we're very close to being stopped out. I don't mind being stopped out. We're still long from the April low. In the 3 times long, we got our position that's left there. Trading, this is a core position. This is a trade, and if it doesn't work, it doesn't work. But it was also partly insurance because so many things have been working well. I just need to know if that was a little bit weak, that's what would happen. Well, it's actually strong, and I'm sure that within a second or two, we'll be taken out for maybe a 1.5 or less, just a very small percentage loss. I don't mind because that means all our the upside action is exactly what we wanted to see. And it's a leg C in the weekly chart. Look, going into that same inside track repellent zone. Very positive so far. Look at that monthly chart, only in a leg A. If this is an A and the Chapman wave buy mode, you should still go to, this is a leg, not a peak. A peak means you've made a lower high, and it takes a month to create that. That means if the high of whatever we make in October is not exceeded in November, you have to wait for the full candle to complete. And then you can say, going into the next month, which will be December, that we've made a peak A. If any time in the month of December, we make a higher high than October, you have to wait for January before you can call it a peak. So far, this is very positive for 2026. Let's go on to the S&P. S&P cash, we're looking at up 48.62 at 67.86, all-time high. And I spoke about this and the techniques that I have for my subscribers, and I have webinars that I discuss. There was the rectangle formation. If it makes higher highs and higher lows and then powers right through before it goes to a D, from the left side high, that is really powerful. So now I can take all of this away. That's the beauty of the technique, is that you can follow this, okay, and it clarifies each. I call the Chapman wave the waveform that never sleeps. And one of the things about it is that every nuance has a particular articulation. So what happened is that becomes a top right there. See the down candle? This now becomes an up candle, an up arrow, and that becomes peak A, peak B, and this is just, it's so nice that when it gets clarified, it means that in your leg C, you can't make a peak D until you have, that means Monday, if Monday is a lower high than whatever we're seeing today in the S&P, that'll make a peak C. Then you have to wait for a leg higher above peak C to go to leg D, and then you have to wait for a peak D. And D can go on for a long time. And that's where you look. There's your peak D. There's your peak D with a Chapman Wave instant restart. I talk about that in my show coming up, the Target Technicians Hour. Now we've gone even higher. So if you're looking at the futures, look at this. See the way I looked at the daily, weekly, monthly? This is the 1 minute. So this is a brand new move in the 1 minute. This is I can't believe I'm saying this. No, it never took out that low. So I have to now say, because it didn't take out the low, I've got an alternate count, F/A. Let's see, now we've got a D, peak D, and under that you've got an A, a gray A. And don't worry about this. I'm just doing this for those people who are watching or Chapman waivers. They'll know exactly what I'm doing. These are gray letters because they're under the previous peak. I'll usually change the color. You don't have to do all the color stuff. I just do it because I'm showing people in live what's going on. Just makes it easier to see. And I do these once in a while. I do a live show. Haven't done one in a while. I really would love to do it, but it takes a little while to prepare and all that. And also I need to know if people are really interested. The people tell me they're interested, but I need to know that they're interested. So this is very nice. Look, there's a fabulous move up in the 1 minute, 5 minute. This is like daily, weekly, monthly, 1 minute, 5 minute, and there's the 10 minute. The 10 minute is the longer term. All right, look at this move. Beautiful. Okay, so we are no more short. We are stopped out. I'm pleased about that. Our core position in the Dow remains. We had a trade, and the trade didn't work, but we've had some other very nice positions. So now let me just show you something very interesting. In the gold, and the gold now is down only 14. I don't think the selling was so intense, but the move up was so strong. There are a lot of people that are still going to say, no, it's going higher. This is just a buying opportunity. I want to buy. And therefore, the pattern, I was asked, what pattern would you be looking for, is the dreaded H pattern. In other words, I'm anticipating, it's the shape. You can't, it doesn't mean to say it's going to go all the way to 42.50. It means it's going to rally a little bit and then arch over and take out the left side high, left side low. In this case, the low of 4,021.2. That's in the gold continuous contract. And the low of the 22nd. And if it does that, you would start to get, so it's a little difficult. It's easier to see in the GDX because the pattern is a little bit more clearer. So here's the GDX. And I'd said that I'm anticipating that October 28th. Actually, I'd redone this. I wanted to go to this low right here for the left side, right side. See, this is called the plumb line. In this case, the plumb line is right there. And what am I looking for? I'm looking for, that's much clearer for me. Okay, there. That could be the support line right there. All right, so we're looking at what date is that? That's the last trading day of October, I believe. We should be testing 67.26 in the key.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
If it's going to work at all, right there. And what's the dreaded H pattern? I should have had that already. I'll get it ready now. It takes just 1 second. Here, the dreaded H pattern is this particular shape right here. What happens is the price rallies, goes to a high, and then comes sharply lower, like that, sloping diagonal line, and then it rallies to a peak A or a B, and then it fails. And look, this is the pattern. And if it takes out this left side low decisively, it can even go 1-to-1 of the arch pattern down to the bottom. It's called the dreaded H. It looks like an H, right? And I made it red so that you can see. And this is going to happen here if, in fact, the GDX over the next, let me get back to this pattern here. If in the next couple of days takes out the low that was made right there on the 22nd of October of 70.28. All right, now let's go on. There's a lot to talk about. What's working? So this is fascinating to me because you've got aspects of the market that they're like little bubbles, nothing, then pop. Look at this, General Motors. So General Motors is doing absolutely nothing. It was sort of walking the line, walking this 9-period moving average in the weekly chart, very kind of just ho-hum. And then out of the blue, earnings or whatever it is on the October the 21st come out, or the day before, and the next day it soars to the upside. Well, look at this candle. So these gap candles, I have webinars on this. There are certain rules that I look at that seem to work very nicely for gap up candles. If there's a gap up and then the price within a day or two, without taking out the low, actually takes out the high and doesn't close above it, that's a good sign, as long as it doesn't go into the middle of the big candle. And then if within the next day or two, if it closes above that, that's really important. Well, it didn't close above it yesterday. It went even higher. It went to 68.48 yesterday. Well, today's a green candle because it closed at the low yesterday within that little high of the gap up. And now it's moving higher. And I say to subscribers, I don't, to my opening call, I said, this is a really good sign. The market's supposed to be tanking. Everybody's talking about crash and tariffs and everything. Here's General Motors. These are deep cyclical stocks. The automobiles, the airlines, these things use steel and aluminum. It takes a tremendous amount of economic energy to be able to sustain the move. And it's a big positive if they can get going. Well, General Motors is saying that is a very good sign. Look at that leg D in the monthly chart, and this leg G in the weekly chart. If I go through it very carefully, I don't even want to say it, but I have to say it. This could be an G's where you got to be really careful, or it could be G/A. Can you believe that if General Motors weekly chart right now, there's no other way I can count it, is in a brand new buy signal that within one bar says it's in a buy mode, because A says, what are you talking about? Every single dip you want to buy, because it should go to a higher B and then a leg C and then a leg D. This is fantastic. So to go with it, just the fact that we're long, because anything can happen, is really not the point. I just want you to bring this up as something that I put into perspective of the overall market. So AA, which is Alcoa, had after its earnings, which were really perceived to be great, it was tootling along the 36s, even the 35s on Wednesday. And then Thursday has a spectacular move, goes to 41.24 and then pulls back. And today it's given back quite a bit. This is that gap up that I was talking about, that candle. This is not great, but it's okay. So what's really important about this is that for Alcoa, and here's another deep cyclical. Can you imagine the costs involved in just getting all the steel aluminum, and if it was steel, getting all the steel together? Well, it hasn't yet done it, but it did spike above this. This is that plumb line that I used, a little lopsided, and I wanted to go to an upside target, and that's it all the way through to, I think that's late November. I was expecting it to get to the 40.32 level, I think it was. And yesterday it went right to that 41s, and now it's pulling back. But that's important. Look, there's the 200-period moving average. The only reason why I want to bring this up is if I'm looking at this as the big economic picture, something like an Alcoa, or if has to break this diagonal Chapman wave inside track repellent zone to start moving into the area of, I'd put it into the 43, 44, probably 44. We'll say, wow, that's a nice breakout. And you can put that together with the steel, and still really, I mean, yeah, U.S. Steel, what was taken over, so that's not there anymore. But look, here's the steel, very slowly moving up. And where is it right now? Here's the Chapman wave inside track repellent zone going all the way back to the 2021 high. And I just join these lines, and I put a double line. I make it pink at the bottom, green at the top, inside track repellent line. And we're right there at certainly, I don't know if there's an all-time high, but it's at certainly a multi-year high, probably an all-time high. And this is Steel Van Eck Vector Steel ETF. This is really good action, right? I'm not talking about short term. I'm just looking at if it breaks out in this leg B, it means that in the monthly chart, it goes into early 2026 before it can even make a D. So that's very important. Now, the weekly chart has already gone to a D. Today, I've got this as a D right here. So D's where you get a little careful because other things can happen. Okay, pop one more time to an E in this case, and you pull back, and you sort of, look how it's walking the 9-period moving average. Look at that beautiful technique of that 9 over the 14. And now the daily chart has just gone to a brand new peak A, peak B, and it's in leg C, just like all the others. So I'm just saying to you, I want you to do this to show you that if the deep part of the economy is starting to improve, and in this case, I wouldn't even say improve, 51.69 to 77.80 in the steel sector. Alcoa going from going from the 23 double bottom low of October of 2023 to the 22 area. Oh, wait, did it make? It went just a little low. I think it went 22. No, it was 21.53. That was in April of 2025. Now this has to follow through. And if it does that, that's going to be really positive. So, all right, good. Let's go to the SMHs, the semiconductors. They were stalling, did nothing. And then, bam, out of the blue, all-time high today. Now, this is going to be important. Right here, 348.53 was the high of October the 6th. 350.05 was 2 weeks later, peak D, and then it pulls back, and now it goes to a higher high. I would still say that this chart at the moment is very positive, but actually it's also starting to bump into a lot of resistance. I'll be back in a moment. Basil Chapman sitting in for Tommy O'Brien. S&P is up 50. The Dow is up 351.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. So let me just do this because it's kind of important. I was asked about the long-term picture, and I'll do much more in my show coming up, The Tiger Technicians. Also, check out my Opening Call Daily newsletter. I think you'd find it very rewarding. So if we're looking at this as the start of a new move up, as a leg A in the monthly chart, I initially called the Chapman Wave methodology the 7-wave form until I found out you could actually get higher peaks. You could go to E and an F, and a G, but never an H. So this is the first leg up, 1. 2 would be down. That would start peak A, meaning you don't make a higher high, it makes a lower high. If that's the case, you couldn't get a peak D, meaning that you go to a leg D and then a down move to start your peak D until, I think it's May of 2027. And look, your monthly charts never go up and down, up and down, up and down sequentially. Daily charts sometimes do that, but you never get that in a monthly chart. So that would be May under absolute perfect conditions to get a D. You never get that. So that makes 2026, and a lot of people are talking about a major collapse in the world in 2026. To me, all I'm doing is looking at the chart, and the chart looks pretty darn good. And it's gone to a leg C in the daily chart, and it's a C in the weekly chart. Look at the S&P. This is the SPX.X. Here we go, the S&P. Look, A, and it's the same thing. If the S&P made up, down, higher highs and lower highs every single month it would be May before you get a peak D. Look at the QQQ, 1, 2, 3. There we go. That's a little different. Not different. I'm talking about the daily chart hasn't made a new high, and that's very interesting. But it has made already a leg D in the weekly chart. But there's only an A. That's May of next year. Look at the IWM. Here it is a little different because it also hasn't made a new high like the Dow and the S&P and the daily charts, but the weekly chart is still strong and it's only an A. So I'm just saying we could have severe decline. We could have a peak A that lasts months before you go to a B. But I'm saying the absolute shortest would be May. All right, with that, I'm going to lead off and say coming up is the show, Basil Chapman coming up straight after this for the Tiger Technician.